There's a good chance you haven't heard of First Brands Group. It's a fast-growing US maker of spark plugs, windscreen wipers, and the other sorts of little pieces that go into cars. It's not a publicly listed company. In fact, its owner, a man called Patrick James, is so publicity shy you'll struggle to even find a photo of him online. And First Brands has always stuck to the more private loan market to borrow money. But it's that debt that is now rattling some of the biggest names on Wall Street. It's also prompted FT reporters around the world to dig deeper into the company's finances. First Brands lenders are now bracing for multi-billion-dollar losses in a potentially messy restructuring or even a bankruptcy. The speed with which First Brands' finances have unraveled has cast a spotlight on the due diligence standards in the booming private credit markets. First Brands has a lot of debt, nearly $6 billion at the last count, a legacy of its breakneck acquisition spree. But on top of that, it had billions of dollars more in off-balance sheet financing, which is largely linked to its invoices. Investors are now concerned that they had underestimated the scale of that more under-the-radar financing. Raising money against unpaid invoices is nothing new. It's one of the oldest forms of credit. But an influx of capital has supercharged this once-stayed niche of finance. In one spin on things called supply chain finance, banks or funds pay a company's suppliers and then collect the money from the business later. Crucially, however, the transaction is not classed as debt, and it's often poorly disclosed on corporate balance sheets. Supply chain finance has already been at the centre of several scandals, most notably the collapse of finance firm Greensill Capital.
Please understand that I bear complete responsibility for the collapse of Greensill Capital.
Several debt investors have told the FT they had long held concerns about First Brands' use of invoice finance. And there were also more basic red flags. Lenders told the FT that they'd really struggled to find much public information about First Brands' Malaysian-born owner, Patrick James. But the FT discovered during our research that James and his previous companies were previously sued by lenders who made allegations of fraudulent conduct. Now, those two lawsuits were dismissed after settlements were reached, but it's the sort of thing that might give prospective new lenders a bit of pause. What about ramifications for the broader auto parts industry? In the US, the sector is heavily dependent on overseas manufacturers. And, as you might imagine, it's already reeling from President Trump's tariff policies. Some of First Brands' customers have also made heavy use of supply chain finance themselves. They've also drawn some scrutiny from credit rating agencies. It's those sorts of factors that will make some wonder whether a fiasco on Wall Street could have a broader spillover into the real economy.